This is Shared Accounts with CU Times. I'm Michael Ogden, editor-in-chief at that publication, CU Times. Do you ever get a word that just sounds weird if you say it over and over and over? Like bacon, 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 bacon? You get it. Words can lose meaning too, like the word strategy or strategic thinking, strategize. It's a word or words that are tossed around a lot in corporate land to make us and our bosses at least sound smart. Like, hey, Ogden, we need to meet to strategize next quarter's revenue goals. On it, boss! That was a terrible reenactment, but you understand. As we wrap up this auto loan month of January, let's back up a bit and at least try to reclaim the word strategy for today's conversation about auto lending strategies with a very smart person you need to know, Bacon. Welcome to Shared Accounts with CU Times, Bacon. With me in the virtual studio today is Andy Mayers, AVP of Operations, Lender Solutions at Cox Automotive. Andy, bonjour. Welcome in.
Bonjour, Michael. How are you today?
I'm doing okay. Andy, let's set up this discussion really quick for our audience. Give us your quick take on what you think is most important to think about as it relates to auto lending strategies.
Wow, it's a great question to start with. I think right now, most important, there's a couple things that are happening from a lending and a credit union perspective. They need to strategize, as you said earlier, on just how they're going to manage and support their consumers in the different ways that consumers want to purchase vehicles. I think most of our lending financing institutions are looking to see how the shift is happening, and most of that's happening online. So coming up with strategies, and to use the word strategy, I would say product strategies, not talking about corporate strategies, but product strategies on how to continue to support members for credit unions and consumers for banks, and also support the dealers that do that. The strategies are how to drive efficiencies in those spaces.
Great. Let's pause there for a moment. I want to tell everyone that this episode of Shared Accounts with CU Times is sponsored by Cox Automotive. Cox Automotive is the world's largest automotive services and technology provider, connecting 22,000 dealers with more than 1,600 lenders and 220 aftermarket providers, fueled by the largest breadth of first-party data fed by 2.3 billion online interactions a year. Cox Automotive tailors leading solutions for car shoppers, automakers, dealers, retailers, fleet owners, and lenders. The company has 25,000 employees on 5 continents and a family of trusted and connected brands that includes AutoTrader, DealerTrack, Kelley Blue Book, Manheim, Next Gear Capital, and V Auto. To learn more, visit coxautoinc.com. That is COXAUTOINC.com, or connect over on X/Twitter at Cox Automotive, or catch them on Facebook and, of course, on LinkedIn. Okay, auto lending strategies. Let's jump in. So, Andy, you specialize in software solutions and strategies for originating loans. It's a mouthful. Can you explain what that entails?
Yeah, thanks, Mike. It really entails the product offerings from a technical perspective. And if you think about lending, there's lending products like how much I'm going to charge interest rates, not working in that space. Where I'm really working in is in the product technology strategies. How do I originate loans the most efficiently as possible? How do I connect to my dealers and consumers? How do I process those loans in a way that's an efficient way to, maximize profitability? So when we talk about strategies, for me, my solutions and strategies are really in enhancing the auto financing experience in the interaction between consumers, dealers, and lenders/credit unions, and automating those processes to drive efficiency.
All right, let's dig in then. Let's talk about consumer slash member behaviors and how they've shifted in how they want to buy a car.
It's been an interesting shift. I mean, one of the things I can cite when I encourage people to check out is the Cox Automotive car buying finance journey. In that journey, we actually survey thousands of consumers on how they want to purchase vehicles and specifically how they want to do financing. And I think a couple of things I would draw from that survey that are important for people to understand is that consumers slash members do want to do things online when it comes to financing. They're very satisfied with the financing process that takes place online because it saves them a lot of time and it saves them a lot of effort. They also have a lot of trust in their lending institutions or credit unions. So if they're working directly with them or financing, they have familiarity with them. So what we're really seeing right now is that buyers want to go online to execute financing steps. They want to make the process easier. About 60% of them want to go and look up credit scores. 50% of them want to be pre-qualified before they even walk into a dealership. A lot of people use it to compare interest rates. It's where consumers want to go from a financing perspective. 43% of them would love to be pre-approved before they even pick a vehicle. And, we've seen a great intake of people applying for credit online. Over 32% of people that we studied now have done full approvals online. And that's also translating into not only the application process, but now also the contracting process, where of the people we surveyed, they would love to do a signed contract digitally as well.
I'm glad you brought up that survey. We do use that survey at CU Times on the editorial side. We actually do take a look at that every time you guys come out with it. It is a handy bit of information to watch the transformation of member behavior. So let's continue on down this path about how should credit union executives think about shifting their processes to meet those shifts that you're talking about in member behavior.
Yeah, I mean, I appreciate the credit unions have always been very good about their member relationships. But to go a little bit further down on the survey and just to see the consumer behaviors, I think there's a couple things we've seen. A lot of it has to do with credit quality. Obviously, a super prime or a non prime customer has a different mentality in terms of how they want to do it. But we're definitely seeing that some near prime customers are definitely trying to extend the relationship with credit unions, which I think is important. But getting back to how the executives should be thinking about it is understand where your consumer is. Some of the credit unions know this. They have great direct lending capabilities. They have branches. They have online presences. But now, how do you participate as a credit union in a more traditional model where the retailer or the dealer is pushing the customer to do stuff online, where the OEMs are pushing the consumers to do online? And we've also seen now actually lending institutions and credit unions start their own online processes. So think about where your consumer is and how you can support the consumer through those processes is really important. And that's what I think the executives can think about is how do I make this a consumer facing capability to service their needs?
Excellent points. So I want to ask you about the differences in auto lending strategies between credit unions, community banks, captives, and banks from your position there.
So from what I've seen, I would look at banks and credit unions a little more aligned. Obviously, both of them have a strong customer base that they want to manage and preserve, and they want to extend the relationships with them. So anytime you expend an opportunity with a member to sell more products, that's a very beneficial thing for the banks and the credit unions. Obviously, the banks and credit unions have different regulatory needs. Our captives, they have a different MO, right? They're to help move metal on behalf of their financing, their OEMs, but they're also much more lease prevalent. So they're trying to retain and encourage the financing through leasing. And then last and not least is our financing sources. They're not the traditional lending sources. They're governed by a different goal and objective. They don't have the same regulatory constraints as a bank does or a credit union does, but they're also dealing in a different credit profile. But fundamentally, the fundamentals of auto finance remain the same across, which is capture the consumer's information, render a profitable decision, and get that customer contracted. So in that sense, all four have the same objectives. They may have certain ways to achieve it, but I think they're all trying to achieve the same thing, which is do profitable business in the auto finance space and service their customers, being either members, dealers, or consumers.
Efficiencies is also another thing I want to tackle here. What are lenders doing or trying to do to drive efficiencies? And maybe a follow up to that is what are the efficiencies they need to consider?
Especially now with the high interest rates, there's a lot of margin pressure. A lot of our lending partners are looking to drive operational efficiency just through automation. And if you think about it, the credit application is a great example of that. Way back when people faxed in or even called in credit applications, believe it or not. But now consumers enter their own credit application information, and that information gets directly loaded into the loan origination system, which a large percent of the time is auto decisioning, right? So there's not a person actually sitting there rendering a decision on my application. So auto decisioning is one of those things. Digital contracting. A lot of our lenders, credit unions are part of digital contracting solutions, which eliminate the need for them to manually open paper, for them to actually have paper, to data enter information, to have business rules checked before they even get a contract. So our contracting solution, if a dealer submits something to a credit union, we can actually tell the dealer that that's not going to meet the policy before they have the customer sign. Taking those steps out of the process. Areas where we've seen evolution in that most recently is in stipulation management. A lot of people want to do a lot more in terms of validating and clearing stips earlier in the process, verifying my income earlier in the process. And then the other place we've seen some areas is the ability for lending institutions to send back multiple approval strategies at a single time, so that if a consumer wants to change their mind, instead of actually having to physically take a new application, they can at the point of sale tell the consumer or member, you're approved for the conditions of your term. So those are some of the things that people are doing to drive efficiencies. It's all about automation, having ability for people to, calculate payments before they even come in and do a loan. Things like that are very helpful.
Can we talk about scale and efficiencies for a second? How can smaller credit unions take advantage of ways to scale their lending solutions? For example, leveraging relationships.
Yeah, I think we've seen a big change in that actually. Some of the aggregators, someone like a Meridian Link or a Criff Select or something like that, they're actually taking on the technical responsibilities of building an integration to someone like DealerTrack that enables the opportunity for all of their members to have access to digital contracting without the investment cost of a full dedicated interface. So leveraging the loan origination systems as a way to deliver that stuff is very helpful. There's other scales that continue to grow. I mean, just like I said, applications now, everybody electronically is receiving applications. So most of the technologies are there. Vaulting's another good example with digital contracting. You can leverage, someone like DealerTrack's Vault to store your contracts without having the investment of an infrastructure and things like that. So those are types of things you can do to drive scale. We definitely partner with the aggregators like Meridian Link and Criff Select and others, because it allows us to offer our services to a broad group of credit unions without heavy investment for the credit unions themselves.
And it does sound like when we're talking about efficiencies and even scale, we are talking about technology, right?
Yes, absolutely.
So, kind of on that point, I want to go back in time a bit and talk about your history because I think I got this right. You've been in the auto finance tech world for what, 30 years?
30 years, 31, I guess, technically this year.
All right. So, let's look back at 30 years younger you. What would that Andy be blown away by today and looking at the marketplace?
He would be blown away by a couple things. One, he'd be disappointed about the fact that we still have paper in our industry today. Like, I can't believe that there's still paper. And that's one thing that I'd be blown away. But I would say also, I guess I'm a optimist, and I think that we should be further along where we actually are in terms of digital contracting. I think we finally hit a tipping point during COVID where digital contracting became the way that most contracts are processed. But I would have thought that would have happened faster. It's also interesting. We've seen some other things. 30 years ago, we didn't have the idea of somebody being able to sell a car completely online. The concept of an EV or a new form OEM actually selling direct to consumers did not really exist. So if I look back 30 years and say, hey, I'm kind of blown away by the idea that the theory that you could sell a car completely online 30 years ago is impossible because we didn't have the technology to support it. But I feel like sometimes it goes slower than we think it should go with technology. And that's just natural, right? You definitely have your early adopters and you have your laggards, and sometimes it takes laggards a little longer. But I'm really excited about how much we have done in terms of automation. 30 years ago, the concept of an online credit application didn't exist. Today, virtually there's no paper applications anymore. So we have changed the industry, but it's hard when you make me think 30 years. That's a long time.
I agree on your point about paper. I would think if we're still using paper, we should still be using mimeograph machines and smell the paper when it comes off, you know?
I do love that smell. It's been a while, but yeah.
Okay, everybody does. What other changes have you witnessed, both kind of good and not so good, in that time?
I think one of the things, unfortunately, not good has been the escalation of fraud. We have a lot more bad actors in our ecosystem for auto finance, and they've used technology and they've been very good at it. And they've taken advantage of things like synthetic fraud. And so I would say that's a not good. I'll reinforce the paper, not good. From a good, I think we really have driven efficiency as a auto finance industry. I'm so excited to be part of the auto finance industry with our credit union partners and our lending partners and captive partners and our financing companies. Like it's a perfect marketplace. Consumers can always find some vehicle to finance a vehicle. And it's an exciting industry. So like when you see what's good about it, like our industry is great. It's a great community of people that work in auto finance and auto finance technology and things like that. But love to get rid of the paper still, love to get rid of the fraud. And I don't personally have to deal with it like our credit unions do, but a lot of regulations have been burdensome. And even just now, the FTC came out with a new ruling called cars, which puts a lot of burden on dealers to sell cars. So, those are some of the things I would say from good and bad.
Let's shorten the time frame a little bit. From 30 years ago, let's come down to 5. In the past 5 years to today, how has that experience for auto lending experience changed?
5 years ago, I would say that most applications originated at a dealership level. That's shifted. Everybody uses the pandemic and says, hey, the pandemic changed things, but the pandemic has really changed things in auto finance. It has accelerated the consumer experience. Consumers wanting to buy cars online, going directly online, not having to call in a dealership. A couple of years ago, we had people that never walked into dealership that were buying cars, and consumers enjoyed that. It demanded that our industry become more automated. It demanded that digital contracting be a standard as opposed to an exception. And it also enforced that, consumers are really driving how the behavior goes. And what you'll see is if you look at all the OEMs that are out there, they're all looking for ways to drive the consumer experience, right? They're saying, how can I make the consumer experience by delivering an online solution? Allow me to buy this vehicle completely online. They're in partnership with dealers, they're in partnership with their captives and the banks and the credit unions, but they're really focused on consumers. So in the last 5 years, I think what we've seen is it's just turned to a consumer driven strategy. And how do I support the consumer?
I want to ask you personally, would you buy a car online?
I would buy a car online. I have confidence in the process. I have confidence in the technology. I'm a person who'll do the research on the vehicle. That's not to say I wouldn't go in and test drive the car and then go back out and do it online. So we're seeing a lot of that. Like one of the survey data points we have is something like 71% of the customers, they would like to start online, but still want to end inside of a dealership. I think people are saying they want a mixed buying process, but the things that would save me time and money, I would absolutely do online. And I will go back to my personal experience. The last time or the time before I leased a vehicle, I waited 45 minutes sitting for the F&I manager to have me sign a document that took 2 minutes. So would I like to do that online? Absolutely. But do I want to still go and test drive a vehicle? Sure. You can do it that way. You can do a mixed environment. It doesn't have to be A to Z online. It can be A to L online and M through N in store and back on online. So I think that's an important technology thing that both our dealers and our lenders and our credit unions need to be aware of because the process could be happening that way. Now, a credit union and a lender doesn't have to worry about as much the technology of the consumer coming in and out of the store, but they do need to be aware that if a consumer is doing something online, they may change their mind on what's already been pre-approved or their structure of their deal and things like that.
So, should credit unions expect credit union executives this discussion we're having about online buying, shopping, everything? That should be the prominent way that they think members are going to behave in the future. Yeah.
I think so, absolutely. All of our studies, we focused on what consumers want because our consumers drive the transaction. Our job is to facilitate the transaction on their behalf. I think that that's what we're seeing. What are the trends? What do consumers want? Do consumers want EVs? And how, as a credit union, am I financing an EV is something you have to think about. How do I participate in the Rivians and the Teslas and the Fiskars world where they're trying to finance vehicles? Like, how do my members do that? I think that's an important. I think the other thing is we also see that, especially in the credit union space with members, how do I sell my car to another member? That's got to be an important thing, but that's a consumer driven experience as well. How do I participate in helping my member buy a car from another member? So those are things I think that our credit union executives need to be thinking about. Also, to follow up with that, how do I go to them directly and get them financed and selected and approved before they go into the dealer funnel and retain that as a customer? I think those are definitely things the executives should be thinking about.
Do you have a philosophy behind how you think about auto lending strategies?
I would say the thing about it most is there's a couple of philosophies. One is what drives the most efficiency for everybody in the ecosystem. How can I make it the most seamless process that a consumer is going to enjoy, that a dealer is going to benefit from by doing business with a credit union, and how the credit union is going to drive it and be most profitable in delivery of their financing offers. So definitely efficiency is one philosophy. And I think the philosophy also is I look at our auto finance industry with a three legged stool. Dealers, you have consumers, members, and then you have financing sources. And all three have to work very closely together. And you have to make a solution that works for all three. Otherwise, the stool doesn't work, right? You fall down. So, and that's clearly in an indirect model, but even in a direct model, credit unions use dealers to help process transactions. So I think those are the philosophies. Let's make sure the stool has three steady legs and let's drive the most efficiency we possibly can.
All right, Andy, I'm going to move on to the final segment of this interview. Now, this is all about you, and I want to see what your reactions are here. Of these famous Andys, who do you relate to the most? Andy Griffith, Andy Garcia, Andy Samberg, Andy Gibb, Andy Warhol, or Andy/Andrew Jackson, our seventh president?
Wow, that's a tough one. Now, most of them all have a lot more hair than I do, so that's a problem. I can't really identify with that from that perspective. I think elements of each. I like to have a little bit of humor. I think that's where Andy Griffith and Andy Samberg. I wouldn't say anything that I'm there or Andy Warhol and his creativity, but when it comes to solutioning capabilities for auto finance, I'm trying to be creative. But that is a tough one.
Oh, that's funny. No, great answer. I will say I recently went to the Andy Warhol Museum. It was fascinating. Okay, Andy, what's the last movie you watched?
It was Oppenheimer, actually, and I was really taken by it. And actually, after watching it, I then got the book American Prometheus and read the book.
Have you finished it?
I just finished it, thankfully. It was a journey, but I learned so much about the atomic age. And I also learned so much about, the book obviously told me a lot more about the experience than what the movie did. Oppenheimer was a brilliant man, and I don't think I ever appreciated how brilliant Oppenheimer was. And oddly enough, he never won a Nobel Peace Prize, but everybody that worked with him did. So I found that to be very interesting. And, I would definitely suggest maybe investing in the movie. The book, for those hardy people, that's a long read, but definitely a good experience.
Do you think you'd look good in the Oppenheimer hat?
Nah, it's not. It might help, but no, I don't. That's not my style. Or a pipe. So I'm going to pass on those two.
All right. Andy, what was the first album you ever bought as a kid?
Wow, first album. The first album was probably it might have been a Spyro Gyro album.
Really? I
Yeah,
loved them.
or a Police album. Don't know the actual time, but I'd either go Spyro album or the Police. And realistically, it was probably a tape if you think about it. But I will tell you an interesting note that you asked that. My aunt and uncle actually were in the wholesale record distribution business, so I had a lot of experience with albums growing up as a kid.
Folks, we just all learned something fascinating about Andy there. I love the Police. I love Spyro Gyra. Okay, Andy, I know nothing about sports. I'm really bad at it. But I do know from my research you are a football fan. So I'm going to ask you this. Any predictions for the Super Bowl this year?
As much as I love auto finance, the thing I love the most after that is probably my Baltimore Ravens, who are in the Super Bowl hunt this year. And I am a big sports fan, big sports fanatic for those that know me. So of course I have to go with the Ravens are going to win the Super Bowl, and I would be thrilled to see that activity happen in early February. So I'm going to go with the Ravens.
Okay. All right. So if I'm hearing you correctly, your love priorities are auto lending, sports, and then your family comes third. Is that what I'm guessing?
Probably we need to edit that section maybe.
Fine. Fine, fine, fine. All right. Ladies and gentlemen, Andy Mayers, AVP of Operations Lender Solutions at Cox Automotive. Andy, thank you for sharing your time and brain with us today.
Thanks for having me.
I love it. This episode has been sponsored by Cox Automotive. Check them out online or on the socials. Please subscribe to Shared Accounts with CU Times anywhere you get or listen to your podcasts. Apple, Google, Amazon. You know how this all works. And if you want to rate us, that would be great. We'd love your feedback. For those of you with questions or comments, feel free to email me over at mogden@cutimes.com. Thank you so much, our producer, Jeff Metz. Join us next week as we jump into a new month with a new big topic. February is Credit Union Branches Month. Lots to talk about there. Until then, thanks for listening.